Hey traders, welcome back to another crypto market update. We'll be going over BTC. We'll also be looking at the relative strength and weakness chart that we've been able to create using the Trading View platform, which is pretty great to see. And then we'll be looking at other assets like the US dollar, the S&P that's breaking out to new all-time highs, which is an extremely risk-on indicator. So we'll be going over that all, but first just wanted to look at BTC here real quick on the BLX chart. This is the longest historic chart, or the historic time frames that we have for BTC, dating all the way back to 2010, which is pretty unbelievable, when it was at 6 cents, under $1 for a while there, until it started to really move to the upside. And clearly we are starting our massive bull run now. So really gives us a lot of perspective, because if we're looking at the previous massive bear market that we had from 2015 to 2016, kind of getting out of that, but 2014 and 2015 were really the major parts of the bear market, similar to 2017. And 2018 did have right here that massive drop off to the $3,200 zone, and then 2019, kind of at the start of spring, had that strong push to the upside to around just under 14K. Came all the way back down, 50% dropped to the downside back in March of 2020 when COVID really started to hit the overall economy. But BTC was the first to actually come back. It was the most buoyant, and we can see that from then we've been really on a rocket ship to the upside. And if we do look at the previous geometry of this major triangle, we can see that this was a previous target, which is now going to be level of support, and it was a key level, and there's a lot of interactions in that zone. Also, there was fibs within this high and low that created the extension of the 61.8 right at that around $2,200 zone. Same with what we're seeing right here at around the 30K level. Same thing, we have the geometry of the triangle as well as the fib extension going above to around that 30K zone. So we see lots of validation that this is going to be a level of support. And when we go on to a smaller time frame, this is now the daily chart. We do see a series of lower highs squeezing the price towards the major level of demand. And we can see that there are lots of wicks to the downside, indicating buy pressure coming in, sweeping in, and picking up the cheaper BTC. There was a drop right here within the symmetrical triangle squeeze right here. As we can see, let's just get our snip. I'm sure you can understand exactly what we're talking about. So let's get the very handy tool we have here and take a picture of the BTC USDT chart. And this was a symmetrical triangle: first rejection, second rejection, third rejection, and then we see a series of higher lows squeeze towards a apex right here, and then the price pushed to the downside. And we still thought that this could be a descending triangle formation, which it still definitely is holding. We see lots of buy pressure, and the candles were able to close within this major level right here. So overall, I do think that this descending trend line, along with this 30K level of support, will hold, and then we'll see a squeeze, a contraction in the volatility. And then once we're going to be looking for that impulsive push with the high R vol, so we're looking for that increase in buy pressure. That's going to be that level of confluence where we see the price action break, market structure, as well as the volume. That's going to be our indication that buyers are now confident on entering the market for our next impulsive push for BTC to start breaking 50K, in my personal opinion. So if it does break, obviously we'll look for maybe a descending zone, something along the lines of this. But at the end of the day, we're going to be looking for a contraction and a continuation pattern to the upside, because we do see that the US dollar is really not looking great. We'll look at the previous price action in the long-term chart and give our 2 cents as to why we think that it could continue to fall. So not talking about the stimulus at all, because we will probably talk about that within the podcast a little bit later today. So going into a different time frame here after the daily, let's jump into the 4-hour. We do see that, let's just get rid of some of these. What we're ideally looking for on a smaller time frame, if we take a picture right here, is for this 30K zone to hold. We see lots of buy pressure coming in, and then we see a level of confluence where there's a series of lower highs, as well as this major level of support turns to resistance. So this is going to be this key level for the sellers. If we start to break above this zone, I think that's going to be an indication that we could be looking for a potential long, especially if we get a nice squeeze like this, a series of higher lows, and then that's going to be our symmetrical triangle with buy pressure holding that level, and then very antsy, wanting to get into the market, impatient, all right with paying the higher price to enter, and then we're going to be looking for that explosive move to the upside, and then a pullback to validate a previous major level of resistance as a new level of support. We see there's a zone right here. We see there's a zone right here. There's also this zone right here if you want to be a little bit aggressive. So that's going to be the three levels that we're going to be looking for possible pullbacks, and then continuation patterns to the upside, or continuation overall in terms of momentum to the long or to the upside, looking long. Also, we do see a slight contraction in the volume, so we're going to be definitely seeing an expansion at a certain point, but I like to see the contraction. I like to see the lull and the drawn out consolidation continue for a little bit longer, just because the longer the contraction, the longer the volatility is going to be kind of stagnant sideways. It's going to be, in my opinion, a nice solid move to the upside as long as we're able to hold that 30K zone. So we're going to be now looking at the US dollar. Not really going to be looking at a smaller time frame other than the 4-hour chart. Hopefully you understand major level of demand, descending zone, squeezing of the contraction. We're looking for that level of confluence to initially break. It's that barrier of sell pressure, that wall of sellers and bears holding that tightly. Once that's broken, there's going to be a loss in confidence from the bears, from the sellers, and the buyers are going to be taking over, gaining that confidence and that conviction to push the price higher. All right with basically buying at all-time highs because they're expecting and speculating that it's going to be continuing to move to the upside. So now let's look at the US dollar, because it is negatively correlated with BTC. They're creating more stimulus. They are continuing with the zero interest rate policy. So overall, I do think that the US dollar is going to weaken, and on a fundamental standpoint, unless they're going to raise interest rates because the CPI, the consumer price index numbers, are increasing, I don't think that they are going to be raising the interest rates anytime soon. And speaking on that, I'm just going to quickly look at the CPI numbers just so we can understand. It's right here. Oh, this is the interest rates here. We're going to be quickly looking at CPI, this is right here. So this is going to be the consumer price index. This is going to be the percentage of increase or decrease in terms of the cost of goods in a certain basket across the board, different sectors. So it's a good indication of inflation. So as we can see, if we are looking for the United States right here, there is basically no inflation right now, and they're looking for a 2-3% target per year. So they're definitely under. They're not worried about inflation whatsoever. But the thing is, when inflation starts to ramp up and the velocity of the currency starts to increase, meaning the amount of transactions taking place at a certain time frame increases, that inflation is going to ramp up pretty quickly, and it's hard to control. And the way that they would control it would be raising the interest rates, making it harder for people to borrow money and harder for credit to become available to individuals to buy whatever service or goods that they're looking for. So we haven't seen the inflation, the CPI numbers go up yet, so there's no reason for interest rates to rise. So the overall reason for the US dollar to move to the downside fundamentally is still in our favor, in our opinion. A little bit of fundamentals there. Now we're going to be looking at the price action here, looking at, let's say, the monthly chart, looking at that 2 double top, massive move to the downside, held that 88 zone of support, moved right back up, basically perfect, not absolutely, but very, very close to that 102, 103 resistance, and then we're right at that level where we previously held as a strong level of support. So if we are able to fall below this zone, that's going to be a confirmation of that double top on the monthly chart, and I think if that occurs, we're going to see a strong push to the downside where the S&P, Bitcoin, definitely a lot of other altcoins will be absolutely pumping, and we definitely want to be a part of it. We want to be profiting off that move to the upside and off the stimulus and the lack of, I guess you could say, responsibility by the US government creating so much easy money and just letting so many zombie companies still be prevalent because they can just continue to borrow money. Definitely keeps a lot of businesses afloat just by being able to borrow money at very cheap rates. So we're going to be going on to a smaller time frame looking from the monthly chart. Let's just quickly drop down to a weekly. We see continuation patterns all around, and then when we do see that price interact with that 88, 89 zone, we are not surprised because we do know that this is a strong level of demand. There's going to be some interaction. There's going to be some in my opinion, hesitation before that next impulsive push to the downside, cracking below that major level of demand. So we're going to be looking for that continuation pattern. Could be an ascending wedge. It could be even a sideways channel, and once that bottom breaks, that could be that trigger. In my opinion, right now, we haven't really seen a nice strong price action pattern yet. We are potentially looking for an ascending wedge. We'd like to see the higher low form to create that second one, and then once we see that third validation, that would be a great pattern. We already see a ascending resistance created, which is great. So we just need to see that squeeze occur, similar to what happened in the September, October, fall of 2020. We're going to be looking for something similar to that. Right now, we just see nice squeezes where we see ascending zones of support get broken by impulsive pushes. So there is more sell pressure. The sellers are definitely still in the market and bears have control. But we're just looking for that nice next continuation pattern to look at in negative correlation with BTC. So then we have more confirmation that BTC will move to the upside when the US dollar is absolutely dumping, similar to what we had in July right here in November in 2020. So that's what we're going to be looking for. Let's jump into the 6-hour chart, maybe the 12-hour. I think that looks a little bit better. So we see these nice squeezes where we see ascending levels of support, and then once that breaks, strong impulsive push, squeeze, strong impulsive push, and then same thing, squeeze, and then we do see this previous support turn into resistance, resistance, 3 validation zones. So that's why I said that this ascending resistance is already created. What we're ideally looking for in this situation would be if we got a low, which we already did, and then a higher low right here, and then if we start to trade up and then pull back a little bit and then trade up, we can get a nice series of higher lows like there. Maybe that's not the perfect line. Let's just redo that really quickly, like so. And then once we start to break and then trade to the downside, that could be when that double bottom failure and then that next impulsive push to the downside, similar to what we had here. Could not rally, and then we saw that squeeze, and once we started to dump below that support, we saw a massive impulsive push, another squeeze, impulsive push, squeeze, impulsive push. Nice trade move to the downside where BTC was really pumping. So we're going to be looking for something similar. I don't think it's completed yet, so we're going to be looking for basically the contraction to continue on both the US dollar as well as BTC, because BTC is currently doing this. If this was the 30K zone for BTC, and let's just say it's kind of doing this, we want to see this contract a little bit deeper, and then BTC go a little bit deeper as well. And then once we see that break, we want to see this break in the US dollar negatively correlated to BTC's continuation pattern. That's the ideal scenario that we're going to be looking for. It's not going to be absolutely perfect, but if there are 2 continuation patterns, one to the downside with the US dollar, one to the upside with BTC, which is what we're seeing right now, if the US dollar continuation pattern does come into fruition, that would be the ideal situation if we saw something along the lines of that. So hopefully that's the case. We'll see how it goes. We haven't really seen a continuation pattern completion for BTC, so it's still in the contraction phase. So it wouldn't be the worst thing just to see that continue, and then we just have more patience until that next impulsive push comes into the market. So now we're going to be looking at some relative strength within the alts. So we will get out of the US dollar. And I believe it was this one right here. Actually, first, before we get into that, we're going to quickly look at the S&P, just how strong it's pushing to the upside. Taking a little while there to load. This is the daily chart. We're not really going to be zooming too much further in. This nice slow climb does kind of scare me a little bit, because we do have situations where these slow climbs turn into pretty sharp, aggressive falls to the downside, where we're looking for major levels of support similar to right here. So if we are going to get that nice sell-off, that's going to be the next zone that we're going to be looking at. But overall, we're just creating a series of higher highs and higher lows, very structured, that previous resistance, new level of support, and then it's even forming right here. So overall, it does look like we're moving to the upside in terms of market structure very solidly. It's not like it is making just marginally higher highs. It's making market structure, so meaning the size of here to here, or the length, is similar to the next zone, which is going to be right around here. It's not like it is going like that. That's not ideal. We're going to be looking for something kind of like that, and then hopefully you're looking for that next really strong impulsive push to take you to that next speed. So it's semi-parabolic, where you're going to get an aggressive increase in the incline of appreciation for whatever asset you're looking at, in this case the S&P 500. So that's going to be, in my opinion, the next move. So it makes sense that the US dollar would be falling, because the S&P is also negatively correlated with the US dollar. When, let's say, shit hit the fan, to be blunt, back in early 2020, February, March of 2020, the only really two assets that retail traders trade, in my opinion, that moved up were really the US dollar and the Japanese yen. If you're looking at the global macro, yes, you could look at other assets, but if you're looking at it broadly as a retail trader, that's basically the opportunity that you could have got, in my eyes at least, as an FX trader as well. And when fear hits the market, I think people are going to be going there, but as of right now, the stimulus in the market is getting pumped into speculative assets like the S&P. I think BTC, people are smart and institutional investors are coming in. So at a later point, there'll be a lot more retail, but right now it does seem like there's a lot of institutions positioning themselves to have a lot of sats in the coming years. So now we're going to be looking at the relative strength. Not really going to be trading the S&P. I just like to gauge what it's doing, so I have an understanding of the sentiment for risk on or off. Definitely we are in a risk off setting, an environment, which makes me really look into alts as well. And that's why we're doing the relative strength and weakness analysis. So when we are looking at this, I'll give you a really quick rundown on what we're looking at. All these different lines represent altcoins and the appreciation or depreciation from a certain point. So when I zoom in and out, it gives different percentages, and that's the percentage from when we initially started at this chart. So let's say in this case, we are looking at the appreciation of all these different alts starting from November 22nd, 2020. And then we can see the leader in this particular chart is going to be Fun USDT. Second is going to be Nano, and then we have DOT in third, maybe fourth. The third one is actually going to be Uniswap. So we can see that this is going to be a relative strength and weakness. We can look at different time frames and get a good understanding of what coins have been doing really well. So then we can understand that yes, they have been relatively strong compared to the basket of alts that we have on this chart. And you can really use this with any asset in the market that TradingView offers, which is pretty unbelievable. I think it's very underutilized. So let's just take a step back to a larger time frame. Let's remove all the drawings there. Clear winner, if we're really zooming back, is going to be Polkadot 500. So let's go to a major. So start of 2020, Ethereum is actually at 1,000% higher at the start of 2020. That's unbelievable. That's kind of surprising, to be honest. We can see Stellar Lumens XLM is going to be third. Polkadot's going to be second. And we can see that Fun is going to be fourth. And I believe that's Nano is going to be fifth. And we can see the lower ones here. What's the lowest one here? EOS is actually only at 6.3 if you invested in 2020. That's unbelievable. Let's just look at some other ones here. Uni's actually not done very well. We can see the top of the winners. Polkadot's done really well. We can see XLM's done really well. We can see that Nano's done really well. Ethereum's done really well. But then if you look and use a different time frame, Polkadot's definitely up there for the top 5 almost every single time frame, it seems like. So Nathan has been very interested in that and has positioned himself to have a significant position in Polkadot. So definitely he's loving it, and I've taken his advice on that too. So definitely good to see that it's very relatively strong. Don't have all the things I look at on here. Like, I don't think I have link on here, but you can do this on your own, picking different ones. But I look at link always just because I absolutely love the project. I really like the price action as well. When we are looking at different time frames, I would say Polkadot would be one to definitely look at. Nano's one to definitely look at. Uniswap, not so much. It's done well recently, but if you look at it on a large time frame, it hasn't really. Just from a relative strength weakness perspective, I think if you're looking at it from an exchange and the anonymity that it is able to produce, and the decentralization and the desire for crypto traders and investors to want to fund and use a decentralized network instead of fund a corporation like Binance, or even like a normal financial institution, I think there is definitely some people who would prefer a decentralized network. So I think that's also a potential play on more fundamentals of Uniswap. But I think Ethereum is definitely something that should be looked at. So let's actually quickly take a quick scan at DOT, because we do know that it has been on the top of the list for basically every single time frame when we are looking at relative strength and weakness, which is pretty unbelievable. And right now we do see lots of wicks to the downside, very strong level of resistance right around here. We see candle closure absolutely perfect at basically $18, and then we see that it's now breaking out at 18 point, let's say $19, just under on the 2-day, and then on the daily we see that previous resistance turn into new level of support. Nice market structure. We see that nice bottoming formation, and then we see lots of wicks to the downside right here, indicating buy pressure, picking up the price, moving it above major levels of resistance and support, of sensitivity, basically right here. You see a nice steady descent where you see buy pressure picking it up, entering, accumulating, and then I think we're seeing that next impulsive push come to the upside here. I think it would make sense to wait a little bit of a confirmation for BTC, but in terms of a technical standpoint of DOT, it does look like it's doing fairly well. Have not broken to a new high yet. Has broken and retested this previous resistance as a new level of support, which is good to see. And then ideally we could maybe see another slight consolidation and then a continuational push to the upside here. But overall, it does look like it is moving to the upside. And what I'm talking about, let's just get a nice zone right here. So ideally what we're going to be looking for is, we've already broken this zone right here. You want to see a slight consolidation. That's not the right zone. We're looking for this high right here to hold. You're looking for that consolidation to continue, and then you get a confluence from this low, this higher low, and then a squeeze coming out from right here, creating an ascending triangle, and then you're going to get that next impulsive push to the upside. But ideally, like I stated, we would like to see that push to the upside after the consolidation slightly more, just because BTC does look like it could use a slight longer contraction in the descending triangle before we get that next impulsive push to the upside. So we're going to be looking for the market to move in unison, but like always, never a bad thing to look at other alts that could be front running the overall market, because it does definitely happen. Ethereum was a very significant front runner at times back in like 2017, as well as even the market that we're seeing right now. So that's going to be the overall video. We're not really going to get into many of the markets here, just because I want to keep it a little bit shorter, just so we're getting right to the point, to the videos that we are providing. Hopefully you are enjoying them. Mainly we're looking at BTC because at the end of the day, it takes so much of the market share. Actually, what we will do is we haven't taken a look at the BTC Dominance in a little while, just because I do look at it very often, but we're not going to be diving too deep. But I like to stick at the large time frames for the BTC Dominance, just because you're not going to trade it. When you look at the smaller time frames, it doesn't look great, and it gives you a lot of perspective as to the speculative nature of the markets. So what we're seeing right now is an actual decrease in the dominance. A lot of alts are moving up, and that is more speculation in the market. What we're looking for, ideally, before we really start to confirm that alt season is here, is we saw a fake out where BTC started to push to the upside. We were unable to hold this previous major level of resistance right here. The weekly candle recently just closed, and then we are now entering the next week here. So definitely the fact that we close below this major level means that we are currently now back in the symmetrical triangle. So then if we use our brush, if we start breaking the 57 range, which is right here because it's a level of confluence with this ascending zone and the horizontal zone, we could be seeing another push to the downside for the BTC Dominance, which means that alts could be absolutely pumping. And we're going to be looking at Ethereum, Polkadot, Link is a really good one, BNB I'm really looking at. There are many others, but obviously, pick wisely. There are some that I think would be, in my opinion, not the absolute best until some things get figured out. One of them is going to be XRP. Yes, it is relatively low compared to the rest of the alts in that high market cap category, but at the end of the day, they do have a lawsuit against them from the SEC. Until they get that figured out, they're going to be delisted on many of the exchanges, so there's going to be a lack of liquidity. Less people are going to be trading, so there's going to be a reduction in the volume. It's going to be harder to get in and out. There's going to be more slippage because there's not going to be someone on the other side of that order to either buy or sell. So hopefully you're able to kind of understand that, diversify if you are a heavy XRP bag holder. And I don't think it's over for the company. I think they will inevitably fight through it, but it's just some FUD that is something to definitely consider when you are looking at XRP as an investment. So thank you very much for coming to another Performante video for a crypto market update. A little bit of global macro. We looked at some USD, which is, in my opinion, something that a lot of people don't utilize and is underviewed. So hopefully you learned something. Hopefully this was educational, entertaining, informative. Until next time, have a good one, traders.